Welcome back. You are watching News Center. S&P Global expects Indian economy to grow at an average annual rate of nearly 7% till 2031. That puts India on the path to be the third largest economy by the end of this decade, with an estimated GDP of $6.7 trillion. The report further says that India's growth will be driven by manufacturing and services exports coupled with demand. However, the report highlighted the need for India to capitalize on its demographic dividend by increasing labor force participation and upskilling as well. We are now joined by Rajiv Biswas, Executive Director, Asia Pacific Chief Economist at S&P Global. Thank you very much for joining us, Mr. Biswas. When we ask you about the decade ahead forecast, what will be the dominant drivers of growth for India? You've said that India will be the fastest growing G20 economy, but what will be the major drivers?
I think one of the great strengths of India, which has been the case for many years, is this large size of domestic demand, particularly private consumption. And I think the combination of private consumption as well as private investment are going to be among the key growth drivers for India. We expect the size of the consumer market in India to more than double between now and 2031. So that creates tremendous growth in many different segments of industry, including in manufacturing and in services. For example, the demand for food in India is expected to double, and that creates a lot of growth in food manufacturing industries. Similarly, rising per capita GDP income is going to drive demand for services as well. For example, financial services, healthcare services. Right. And by about 2031, India's per capita GDP is going to more than double to around $4,500 per head. So that also creates a lot more spending power. And in fact, the $5,000 per head in US dollar terms GDP per capita is a tipping point that we've seen in other developing countries. When they hit that mark, growth accelerates. And that's because disposable income becomes much greater for average households. Instead of having to spend a high share of their income on basic needs such as food and housing, they have more spare income to spend on many areas such as communications, recreation, tourism, and that creates a lot of momentum for the economy. So I think those are some of the big drivers. We also expect a very strong outlook for services exports, particularly in the IT BPO sector continuing to grow strongly, and also manufacturing exports as India becomes more a high-tech manufacturer in many different areas of industry.
Mr. Biswas, if I were to ask you about growth expansion, your report says that while there has been growth expansion in India, it has been uneven and less sustained than other East Asian tiger economies. Tell us about the areas where India has been falling behind, areas which would be challenges over the next decade.
If we compare India's growth pattern to what has happened in the East Asian tiger economies over the last 30 or 40 years, the East Asian tigers had a growth model that was very much driven by export-driven growth in manufacturing, exporting often, textiles, electronics, electrical goods, whereas India's export growth momentum has been heavily driven by services. Indeed, services exports are increasingly a larger share of total exports now compared to, say, 20 years ago. And that's actually a very strong, favorable factor for India because it's creating a lot of high-paying, white-collar jobs. It's also creating a lot of growth in areas that require highly skilled talent, such as research and development hubs for multinationals, IT back-office services. So I think these are actually high-technology areas that are helping to strengthen India's technology backbone. So I think India's growth model, although it's different to the East Asian tigers, is also a very dynamic and increasingly successful model for India.
Right. I would like to ask you about the geopolitical tailwinds. The report speaks about geopolitical tailwinds being in favor of India. But how long will the China plus one opportunity stay? How long is that window?
I think we've seen a tremendous transformation in the way multinationals perceive India in the last 15 years. And the clearest evidence of that is if we go back to the year 2000, India's foreign direct investment inflows in the year 2000 were only $2 billion US. In 2022, just about 2 decades later, total foreign direct investment into India had reached $85 billion US. So you can see how multinationals have completely changed their perception of India as an investment hub, both in manufacturing and in services. And part of that is the steady, robust growth that we've seen over the last 20 years in India, and the transformation of India into a more technology economy, with one of the highest rates of unicorn startups becoming successful in India. And we're also seeing a great deal of Western multinationals investing in research and development hubs in India. So all of these things have changed the structure of the Indian economy in a favorable direction. And we're also seeing the rise of homegrown multinationals in India becoming more and more successful globally. Most important of all for multinationals is this very big expansion in domestic consumer market in India, which is creating a lot of new opportunities for their revenue growth in many industries across India.
Right. My final question, India wants to raise manufacturing share in the GDP from 17.7% to 25% of GDP by 2025. How can it do it? Will investing in logistics be the key?
Certainly, India needs to continue to invest heavily in logistics to improve the efficiency of transportation, also the continued development of industrial parks and other infrastructure to support manufacturing industries. Ports, airports are also very important as part of that process. But that has been happening. That's been happening at a pretty dynamic rate in India in the past decade. And a lot of that foreign direct investment that's coming into India is going into those sort of areas from the US, from Europe, from Japan, from the Middle East. So all of this is supporting the more efficient, higher productivity growth of manufacturing. And I think the big positive factor that will help manufacturing to grow as a share of the total economy is going to be private consumption. As India's private spending continues to rise, as the consumer market doubles over the next 7 to 8 years, we're going to see a huge increase in Indian consumer spending on many manufacturers. So I think that will, at the end of the day, be the crucial driver for India's manufacturing sector growth. But of course, exports will also be important.
All right.
And I do think we're seeing a greater range of exports, particularly in high technology goods coming out of India. India's been very successful in developing some parts of its electronic sector. There's more to go. India needs to establish its semiconductor sector. But I think what's been happening in the last 7 to 8 years is very encouraging and does show that India is becoming a heavyweight globally in manufacturing in many different areas, ranging from areas like aviation, commercial aviation, through all the way to electrical and electronics manufacturing, auto manufacturing. India's really established itself as a hub for manufacturing autos and components. So there's a lot to be, I think, to be proud of for India and what's already happened. And I think it's a very exciting future ahead in the next 10 years as India heads towards becoming the world's third largest economy by about 2031.
Okay, we've run out of time, but Mr. Biswas, thank you very much for joining us with your outlook on India's growth over the next 10 years or so. With that, it's a wrap on this edition of News Center. More updates continue right here. Don't go anywhere.